You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from a little program we like to call, or a little network, I should say, the Options Insider Radio Network. If you're new to the program, indeed new to the network, first off, welcome. You're a little late. It's been nearly a decade, but we still welcome you nonetheless. The audience is growing all the time. And of course, also, you have a lot of great programs to catch up on, including many, many great archived episodes of this fine program, Volatility Views, some great interviews stretching back to the early days of this program, Nobel laureates, academics, researchers, traders from throughout the world of volatility trading and analysis and research. And it's been a fun run, indeed. And check it all out. You can probably the easiest place to find all the archives of this program, as well as every other program, all the other 14 we do on this network, the mothership, theoptionsinsider.com. While you're there, click on some breaking news from the options market, read some maybe educational articles, some analysis from the world of options, most actives, unusual activity, all that fun stuff. And when you're ready to begin your audio journey, click on the Insider Radio Network tab, top corner of the page, or there's a call out there right on the right-hand side of the page. You can just go right to the show, your show of choice, and begin your audio adventure. Of course, always available by iTunes and TuneIn and Stitcher and Google Podcasts and all those other fun outlets, iHeartRadio, you name it, we're there. And of course, via the app stores as well, our Options Insider Radio Network app store, or app, I should say, available in the iOS, Android, and Amazon Fire app stores. You may have to search for the whole thing sometimes. I don't know, some people write in asking about that sometimes. It's the iTunes and all those app store searches are just terrible. So you're probably better off. I know it's a pain, but maybe just type in the whole thing. If you just type options, sometimes you get a whole bunch of weird stuff that you never know what the heck you're going to get. So you might have to type the whole thing, but it's worth it. It's got all the shows in there and a whole decade worth of programs. You can build your own playlists. And of course, however you listen, including those people who are joining us live via Mixlr, MIXLR. Of course, we stream this program live every Friday, noon Central, 1 p.m. Eastern. Via Mixlr, love to see you guys in there if you can indeed join us. I know our Mixlr crew growing all the time. If you don't want to sign up for a Mixlr account, I get it. People don't like to add, even though it's free, they don't like to add new accounts. A lot of people like to you can just still stream it via your device of choice, then ask us questions via Twitter and all sorts of other fun areas. I know a lot of you guys like to do that. Now, however you listen, make sure you send us your questions, your comments. We love to hear from you guys. All right, and joining me on the old program today, let's start off, let's go in order, I believe proximity. Let's start, I'm not sure where the greasy meatball is. I guess we'll find out. Starting off with the Greasy Meatball, a.k.a. Mark Sebastian, from Carmen Line Capital by way of Option Pits. Mr. Greasy Meatball, welcome back to the Volatility Views program. And where are you beaming in from today?
I am in from one of the 10 towns that changed America, beautiful Riverside, Illinois.
Yes, 10 towns. You and Tucson, both talking up your burbs all the time here on the program. We need to get some money from the respective chambers of commerce here on this program. And also joining us, I think, a little bit closer to, actually not, we'll save him for a second because he's our guest. Instead, we'll go to a man who's farther away, but close to our hearts, of course, the corner office man, even though he's not in his corner office this week, Mr. Russell Rhodes, the senior instructor over there at the Options Institute by way of, is it Oklahoma University you're beaming in from today?
Oh, my God. I'm going to freaking kill you the next time I see you in person. I'm at Oklahoma State.
Oh, Oklahoma State,
University
yes.
of Oklahoma.
Yes, the well-known rivalry.
At Oklahoma State today.
Well-known rivalry, OSU versus University of Oklahoma. How foolish of me to wade into those bloody waters. I am indeed chastened, sir. All right. And lest we offend our handful of Oklahoma listeners, let's also welcome on our guest here. He's been on the program before, even though it's been a little while. He is Mike Thompson, the portfolio manager over there at Typhon Capital, as well as Kaizen Advisory. Mike, welcome back to the Volatility Views program.
Thanks for having me. Glad to be here.
All right. And with the team assembled, we're going to dive right on into our volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review. This is indeed the portion of the program where we break down the week that was and indeed still is. From a volatility trading and analysis and performance and trending and all sorts of other fun aspects. Again, we are streaming this live on Friday, October 7th, right around noon Central, 1 p.m. Eastern, so right in the middle of the session. And of course, you guys who follow the market know we had a big number this morning in terms of non-farm, not exactly given the market the love it may have hoped for. Most of the major indices selling off about 0.5% or a little more on the day. S&P off about 0.6%, the Dow right around 0.5%, and the Nasdaq right around a similar level to the S&P. And of course, VIX Cash, even though the numbers are already out and we're approaching the weekend, a little bit of a sell-off, giving us a little bit of a lift to the old VIX Cash, hovering in the high 13 range, right around 1390 or so, up about a little over a point today. So I think we'll start there. And I think we'll start on the volatility review since you are our guest. Mike will give you pride of place. And if you're not familiar with Typhon, has been a little while since they've been on, listeners. If you're not familiar with them, they play exclusively almost in the VIX futures. So they're trading that term structure back and forth. And I thought this would be a good time to bring them back on because if you've been listening to the program for the last few weeks, you know, we've been talking a lot about VIX futures and VIX futures term structure and a lot of the mysteries and vagaries within. A lot of you guys writing in with questions. Why is the contango so steep? Why are the options in December with the 20 handle pricing like at the money? Why is this? Why that? About the VIX futures. In fact, I think we even said only half jokingly on a recent episode that the answer to all volatility questions lies in the VIX futures term structure. So I thought, who better than to bring on a guy who pretty much lives there 24/7. So Mike, with that set up, what's been catching your eye out there and what's been lighting it up in VIX futures? As we're talking right now, the VIX, the front month future, still has about a little over 2, maybe 2.5 handle inflation, shall we say, to the cash right now. So that's been bewildering a lot of our listeners, why it's so steep out there. So maybe let's start there. What is your read on the current term structure out there? Why is it so steep in the contango? Why have we been seeing all the interesting developments we've been seeing out there over the last month or so?
Right. Yeah. Well, obviously, the term structure or the steepness of it is readily observable. Like with most stuff in markets and investing, you know, it's not a single variable that is causing that steepness out there. I think, you know, it's pretty easy to point to kind of the macro uncertainties out there that can put that type of premium in the VIX futures term structure. You know, everyone knows we have this crazy election going on. More recently, there's been all sorts of worries around Deutsche Bank and their capital challenges. So you have a multitude of macro uncertainties in front of, kind of a traditionally volatile month. So combine all those factors together and you get a large degree of uncertainty premium or uncertainty bid in that term structure. So as we kind of knock down one worry after another, we would expect that spread to close, whether it's spot rising or VIX futures falling, sort of to be seen. But it's a multitude of uncertain variables out there that are causing that steepness.
Now, as I recall, you guys have a lot of, shall we say, colorfully named strategies. I recall one of them was the mullet. You had a kicking the can. You had a few other strategies out there. So how does this particular term structure, this contango, how does this shape up, and what strategy is it appropriate for right now? Is this a mullet scenario we're in, or is this something else entirely?
Yeah, we do like our code names for our different strategies or positions along the curve. Generally, with a curve this steep, it actually lends itself a little bit better to the reverse mullet, which is clearly called the Tellum. So, that would be, a strategy that plays differently on the curve. What we're looking at recently is trying to take advantage of some of that steepness in the front, but also look to lay off some of that risk in the back. So, the January future will hold some of the, potential Fed hike uncertainty, some of the kind of election fallout uncertainty. So we can get our arms around or understand why the back months are holding a large bid, and maybe will hold that bid better than, some of the near-term months. So we're kind of rotating back and forth between the mullet and the Tellum, depending on the day or the week.
Have you trademarked that Tellum? Because I like that. I'm gonna have to get my hands on that after the show.
No, I think that's in the public forum. It's readily Googleable.
No, it's Googleable. Okay, well then I guess your trademarks aside. And how is just in general? How has this last month or so been for you guys over there at Typhon? It has been an exciting time. Leading into the end of the summer. Volatility wasn't the most exciting place to be. The term structure wasn't the most exciting place to be looking at. I know you guys have been on in the past where you've actually talked about exploring a little bit farther afield, looking at other volatility-related products to expand your universe into. So, A, how was this last month, now that the VIX have kind of come back to life a little bit? How has that been for you guys? And B, are you still considering expanding and exploring into other products? Or is there so much action right now in VIX land, you guys are just hanging your hat there in the mullet and Tellum?
Yeah, the last month and a half has been good because it's provided far more movement and tradable opportunities. I'm sure that's music to Russell's ears. Our volumes have picked up a lot just because there has been no one set strategy that would have worked throughout all of this. It needs to be kind of dynamic and moving with the market. So there's been a lot more trade in the last month and a half. And as far as moving further afield, we've for Kaizen, we use the VIX term structure to inform the strike selection for our S&P option credit spreads that we run for them. So, further applicability of what the term structure is telling us translated over to S&P options.
Yeah, well, obviously those two areas do tend to coincide nicely. They play together nicely. Like chocolate and peanut butter. They go together well. So I guess it's not exactly surprising you guys would maybe consider exploring and expanding into that realm as well. Since you mentioned Russell, we'll bring him on next before he takes more umbrage at my conflating his Oklahoma school of choice. Mr. Corner Office by way of the land of academia. What's been catching your eye now in the week that was, and indeed still is, from a volatility perspective, sir?
Week that still is, and I don't mean to jump ahead to the weekly stuff, but man, is the October 12th future at a premium relative to spot. I don't know. I'm searching around as you guys are speaking, trying to figure out what they, and I always like to refer to it as whoever they happen to be. What do they think's going to happen early next week that you've got the October 12th contract bid at $15 right now with VIX under 14? That That's the thing that's caught my eye. I can understand that going into today, but now that we've gotten the employment number behind us and this thing expires before the FOMC minutes next week, I'm just, what am I missing?
I would say
the election or the debate.
Yeah, the debate on Sunday.
Oh yeah, there's a debate on Sunday night, isn't there? How about that? Way to go! So I've been trying to ignore all of that as much as possible.
It's a healthy way to go.
So what you basically, Mike, is our theory that if you are a short vol trader, you're hoping Hillary Clinton doesn't have a coughing attack and do poorly, and if you are a long vol trader, you're hoping for the power of Donald Trump's mullet to come into effect.
Yeah, as unfortunate as those drivers of the market are, I have to say that I think you're correct. That is the only thing that's keeping me in tune with the two candidates and the debates and whatnot, because it will drive price action. I think you're right. Hillary, does all right. Kind of the same performance she had. I think vol would have a tendency to fall, especially if her poll numbers pick up after the debate. And you're right, if Donald has a kind of a resurrection or does well in the debate on Sunday, I think vol would stay bid.
Interesting.
Yeah, it is kind of interesting. You're right, because on a last show, I believe it was, we were all kind of collectively somewhat dismissive of the potential impact of the Donald, et cetera, the whole electoral cycle on the election. It didn't seem like the Donald was really closing in that much. Then, of course, new poll numbers came out early in the week showing that effectively, or last week, that he was actually in some areas leading. Then, of course, the debates happened and a lot of shifting in those numbers yet again. And of course, we even polled our listeners last week to ask them what they thought, and they were all squarely in the Trumpocalypse camp, that Trump would somehow cause VIX to spike sometime between now and the election, well north of 20, over half of the listeners. Of course, some of them could have just been gravitating to that cool, awesome, and now trademark name, Trumpocalypse. Don't try to use it; we own it. But still, it is interesting to watch, and it seems like, at least for the time being, the VIX futures are pricing in a little bit of kerfuffle, a little bit of fluff. A little bit of interest as we're talking, still about you're about 1.5 points right now between the front month and the cash. So interesting stuff. That said, take us home, Mr. Greasy Meatball. What has been catching your eye in the week that was, and indeed still is, from a volatility perspective?
It's interesting. Yeah, we've got this big term structure, and the S&Ps were off, and looked like they were going to fall apart. What's been kind of fascinating is how, yes, we've had this huge consistent premium. But then look at how little the October future has actually done over the last 3 weeks now. If you go back to basically after September expiration, I think the October future briefly touched below 15 and briefly touched like 15.5, but has basically stayed within a couple of ticks of 15.35 for almost 3 weeks straight. It's fascinating the way that has worked out, and it's, for all the talk of volatility, there's been almost no volatility in the October future, and that might be one of the reasons why you're not seeing a lot of a bid in VVIX. One thing I'm being told by the guys on the floor, there is nothing happening in VIX options. Normally, if these things look like they might be like a one-off or a two-off event, you'll actually start to see some sort of price action. You'll see some sort of volume in VIX options. Nothing, absolutely nothing. And I'll tell you, I see value in owning VIX puts into the weekend, and I saw value owning them today though, and I was wrong there. So who knows?
Yeah, you're certainly right about the VIX options. Obviously we parse a lot of that for this show. About halfway through this week, we just kind of threw our hands up and there is not much to speak of. Not to preface Russell's weekly rundown. I'm sure he's found a few nuggets for us. In the weeklies, we kind of leave that domain to him. We don't look there so we don't step on his toes. I know he likes that segment. But still, yeah, in the mothership options, there was not a heck of a lot. Lighten it up. Not even our proverbial, our cliche at this point, short 1x2s going up for some size. Not even a ton of those. So it was, when those aren't going up, that it's just a quiet week. But since we're talking futures and volume, it is a good time to be in the vol futures business. The numbers coming out, of course, for September from CBOE, and they were pretty strong. Total average daily volume over there up about a quarter, about 25% from last month. Of course, last month, a pretty anemic month, so bear that in mind. And about 3%, up about 3% from a year ago, which is a more relevant comparison. Index options had about an ADV of about 1.8 million contracts, up about 24% from August of last year. And overall, about 5.1 million contracts total. That's up about 3% from September of last year. And getting into our neck of the woods of VIX. VIX options ADV was still around that kind of magical 600,000 number. This time about 615,000. That's up, again, they only compared to August. So about 22% from August. I don't have the number here for September of last year. I'd imagine it's probably roughly in line with the other numbers, up a couple of percent. And VIX futures, getting back to the heart of it, ADV of about 302,000 contracts, up a whopping nearly 50% from August. That shows you just how anemic August was, but still a roundly rough and good number because it was up about 20% from SEP of 2015. So overall, a good time to be in the vol business. That said, Mr. Rhodes, I know you've been looking far and wide for all sorts of fun things to talk about in the VIX weekly options. So without further ado, I won't make you chomp at the bit any longer. We'll dive right on into Russell's Weekly Rundown.
Now, Russell's Weekly Rundown.
All right, everybody, as the man said, this is the portion of the show where Mr. Rhodes holds court for approximately 20 to 30 minutes, detailing the extensive volume and activity and strategery going up in the VIX weekly options. Mr. Rhodes, I hope you have your talking pants on because it's time to go, sir. What was lighting it up this week? And I know it was tons of volume out there in the VIX weeklies.
Lighting it up. That's kind of difficult to. That's just not a fair phrase to relate to what's been going on in the October 12th contracts. There's just not the open interest is about 20,000 or so. The only thing that really looks kind of interesting goes along with what Mark Sebastian just said. It looks like there's a decent demand here for the October 12th 14 puts and the 13.5 puts today. With the future up around 15, as I already talked about, there's a little bit of demand for some options that'll pay off if if the debate is not a disaster for Hillary Clinton. Volatility will come right back in line come Monday morning. That's the only, because you guys say that's what they're bracing for. It probably is what they're bracing for because I've heard a lot of talk about it around the office. But again, I am doing my very best to stay clear of the election until about 2 weeks before it.
So you still have about another 18 minutes to go, sir. By all means, Phil.
18 minutes. Do you want me to start making things up?
Hey, Russell, I was telling Mark I saw a unicorn today in the VXX market. Someone actually bought a VXX call spread, the 40-45 call spread, 5,000 times for 21 cents. Wow. It's a unicorn.
That is a unicorn.
That's a unicorn trade?
Yeah.
Which expiration?
The regular October.
Oh, okay. So they got a couple of weeks.
Yeah.
Well, you've seen. There've been a handful of trades, and I think it's just because it's October, where you seem to have people a little bit more on edge. Maybe because the election's coming along. I think probably the big risk events, because I don't think the election is a risk event. I think the big risk events are probably into 2017 at this point. I think everybody will hold their breath around the election, then mentally prepare for a rate hike in December. But the actual function that will be Brexit, I think is going to start kicking in the first quarter of next year. So the actual impact of it might start to show up. And how much longer can China continue to sweep things under the rug? I just feel like 2017 is, they always have a year of something. It's the year of the three-legged dog gets hit by a car.
There you go, offending our Chinese fortune cookie distributors all around the world there, sir. But you're right, aside from the weeklies and, the VXX call spread, that does qualify as a unicorn. As often as we say here, it's very rare. Last few months notwithstanding, it is fairly rare to see a lot of put activity in VIX. A upside call activity in VXX is even rarer. Just by definition, we talked about it many times. I think we're probably going to talk about it again later if our listener mail is any indication on the ever constant erosion out there of long vol products like the VXX. So owning a call spread's not exactly something you want to put in your 401k and set it for a rainy day. But still, 5,000 lot. That's interesting and worthy of note, perhaps more than a lot of the other paper we saw going up out here in the mothership VIX product this week, which, like we said, was, shall we say, an anemic week out there. It's been averaging about 615,000 contracts a day. Most days this week, pretty much every day this week actually, was well shy of that. Most of them coming in at about 50%, about 300,000 and some change. So that should give you some inclination that not exactly a lot lighting it up in the world of volatility this week. The hot strikes going up, the top 10 strikes right now, if you can call anything hot this week. That said, number one, with shall we say, a mild bullet, a 22, as opposed to a 357 Magnum, would be the OCK 21 calls with only about 250,000 open. So comparatively to some other strikes, we've seen all the 30 strikes going back for months now have been up there with 400,000+ contracts open. This time, not so much. The OCK 22 is number two, 237,000 contracts open there, followed by the aforementioned 30s, only at number 3 this time. The OCK 30s with about 216,000 contracts open. Down to number 4, the OCK 20s, pretty much all OCK except for one NOV on the list this week of the top 10. Number 4, the OCK 20s with 207,000 contracts open, so a little more reasonable strike selection there, followed by the OCK 17s, far more reasonable, with about 206,000 contracts. Number 6, the OCK 26. Pretty much take the whole OCK strip. 180,000. Number 7, the OCK 25s. 167, all the way down to number 8 to get our first and only put on the list, the OCK 17 puts. So an interesting selection. Usually of late it's been 13 half, maybe 14 puts that have been kind of lightening it up. And in this case, 17 put. An interesting choice there. 146,000 contracts open there. NOV 30s, again, that 30 handle, it just captures the imagination. It refuses to let go. 121,000 contracts open there. Number 10 on our hot strikes list, 116,000 of the OCK 24s, total of about 5.8 million contracts open. Actually not bad given the relatively anemic volume in recent weeks. About 4.3 on the calls, about 1.5 on the puts. Before we move away from VIX, really quickly, Russell, I did see this. I know you're kind of joking, but you did have an interesting blog post of the potential earth-shattering impact on the VIX of a Cubs World Series victory. Would you like to detail your detailed analysis here for any of our listeners who may have missed your blog this week?
Well, I had 3 thoughts behind this, and the first thought is it's funny. I was talking to a couple of people on the floor, and I said, "Well, so what do you think happens if the Cubs win the World Series?" And they said, "Well, if it's a school night, nobody comes to work the next day, so there will be less liquidity in our market." I was around back when the Bulls would win championships, and I can recall that being the outcome, that we had more people calling in sick the day after the Bulls won their championship, either due to being arrested rioting or just suffering from staying up all night at one of those bars that we used to hang out at on Rush Street when we were half our age. The second one is, everybody's going to start looking for other outlier events. Hey, if the Cubs can win this thing, why can't Donald Trump win this thing? And if people start thinking about outlier events, we know that is a positive for volatility, because everybody starts preparing for the next black swan. And then, finally, I think if the Cubs win the World Series, and I'm really hoping they don't, that means that hell will have finally frozen over, which means Satan is going to be too busy worrying about hell, not making bad things happen on Earth, and then Mark Sebastian will finally be correct, and VIX will drop below 10.
That's it. That's the catalyst, huh? It's Cubs victory.
That's
you've drawn an interesting line, sir, between Cubs victory and the impending Trumpocalypse And then, of course, the actual apocalypse. Zombie or not, you did not clarify. I myself prefer a zombie. I think it's a little bit more fun than just a straight-up apocalypse. But hey, everyone's apocalypse flavor is their own. But check it out over there at Russell's blog on the CBOE to learn more. And you guys are always hitting us up with a lot of interesting questions. So I think we'll spend a little bit of time with you guys today answering our volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL, posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody. It's that time, the portion of the show where you guys hit us up with your questions, your comments. He mentioned all the ways you can do it. Of course, also via Mixlr if you are indeed listening live, or via Twitter or the other outlets if you're listening live. And we'll usually catch them in time to feature them on the old program, if they're good. That's the one caveat. We got a bunch to get to, though, so let's start plowing through them. This first one was actually a discussion topic suggested by listener Alpha Jack. He writes to us, hey, a cool piece in Barron's about XIV, of course, our famous, much maligned inverse volatility product here. He goes on to write, reminded me of what you guys always talk about with these inverse products and the roll risk. Short-term only, buyer beware. Is this worth discussing on the show? Well, the answer is yes, because we are discussing it. But also, he included a link, and it was an interesting article. I did have a chance to check it out. I think it was by our old buddy Chris Dietrich. He used to write the options column for the Journal over there. So he's kind of well-versed in this stuff, on this kind of thing. And he actually goes to pains in the article, which is why I thought it was interesting. I'm guessing that's why you thought it was interesting as well, Alpha Jack, to really kind of detail his hesitancy to even talk about these products. And that's why Barron's and his column, he hasn't written about them extensively, because even though they're very popular and they get a lot of volume every day, they are extraordinarily dangerous in the wrong hands. Let's see. He actually writes, this is a story about how your columnists learn to stop worrying and love the bomb, a.k.a. these inverse strategies. It says it has taken years for me to warm to this strategy, and make no mistake, the risks are high. The actual article itself is called, I believe it's called The Power Tool for Traders. If you want to search for it over there on Barron's, we'll have the link in the show notes as well. He says they're worthy of discussion, though, because they've repeatedly proven to be a slam dunk in the world where VIX has been coming off of late. So it is interesting. It's a very long and detailed article. I don't have time to do the whole thing, but he also mentions the impact of things like the roll yield on other products like VXX, and why it's so dangerous to get into a lot of these types of products out there in general. But it is interesting, I think, worthy of note. We don't talk about XIV a lot. I know, Mark, that's one of your names you like to watch quite a bit. But in general, do you have any thoughts on this article if you had a chance to look at it? And also, in general, kind of like the article's theme here, maybe address the suitability or perhaps lack thereof of XIV for a lot of the broad public. I mean, that's a very... you're already talking VIX, which is a derivative of a derivative. Now you're talking kind of an inverse product on that derivative of derivative. It's a lot to wrap your head around, I think, for your proverbial grandmother from Iowa. But that said, what are your thoughts here about this and about maybe XIV in general?
Well, I think a lot of people look at XIV as free money because, they look at a long-term chart of something like VXX or UVXY and think, oh, well, the inverse of that has to go up forever. Well, there's some risk there, and I know Mike can add to this because there was a period of time during Brexit where the VIX futures made a nasty move, a scarily nasty move, and so did the VIX Cash itself, and it was pretty ugly. And Mike and I were going back and forth as to whether there was a real chance that, maybe we could have seen an XIV shutdown. And in addition, there could be some problems with XIV. XIV can break. It's a little known, or it's kind of a well-known, little-known fact. So all the pros know this, but maybe some of the retail public don't. But if you short VXX and XIV at the same time, you make money. And so it's a great stock or a great ETF to own with some sort of systematic approach of taking it off, then putting it back on when kind of the contango curve moves in a certain way. I would argue that, there's XIV is a simple, less thought out, more volatile version of the kind of flagship Proteus method. And there's some reasons why people consistently choose to go with the Typhon Proteus approach rather than simple XIV. And I'll kick the hacky sack over to Mike on that one.
Yeah, I think like Mark was saying, you can look at the chart of XIV and feel like it's kind of a no-brainer if you just give it time. Our firm belief is that there is no such thing as a set it and forget it strategy in the volatility market. You need to always be cognizant of the sort of changing price relationships within volatility. The roll yield is a real thing as a function of time. You can have sort of stagnant VIX futures prices and a steep curve and not have roll yield really show itself. You need movement and friction to have that roll yield kind of take effect. So I think it's most dangerous to have a set it and forget it type of position in whether you're long or short volatility.
Since we're talking roll yield and the mysteries therein, let's get into it with our next very detailed question. I love that you guys hit us up with these treatises on all things volatility. Let me see. Let me just pull this one up a little bit. All right. Here we go. This comes from Think Tank Trading, and I'll try to summarize as much as I can here. He says, because we talk a lot here on this program, obviously, listeners, about VXX and kind of the erosion they're in, and how buying longer-term VXX puts is one of the closest things you can get, and there's no sure bets, but it's one of the closest things you can get out there in the marketplace to a pretty decent long-term bet. Put them in your 401k, and you wake up a year or two later, oh, that's pretty good. We've talked about that a lot. He's kind of disputing why that actually works. We've said many times it's the roll yield, as Mike was just alluding to, that really hurts it because, of course, buying expensive longer-term vol, selling cheaper near-term vol, doing that on a regular basis, it's going to cost you money. He has a little bit of a different viewpoint on it. He says the VXX roll yield is a net neutral roll, and the drag is from the rest of the holdings decaying down the curve. VXX roll is like trading $1 for 4 quarters. They are rolling notional values, not equal contract amounts. If the roll yield caused the drag, Barclays would be broke. 1/30 of a roll isn't the issue. It's the 29 and 30, so the last couple of days of the month as opposed to 1 day a month. That's now decayed. He actually cites an article here from Six Figure Investing. I haven't had a chance to go through all of it. It's pretty lengthy. The cost of contango. It's not the daily roll. And this article says the daily roll is not reduced to ETP's value. This is a long article. I'll try to just break down the bullet points here. The article says there's a widespread misconception that the roll process itself is the cause of the ETP price erosion. After all, you're buying high and selling a roll, but they go on to say the roll is not the reason the ETP price erodes. They make some analogies to depreciation of a car. They say I think this differential is harmless, but in the grand scheme of things, it might be trivial, but doesn't mean it can't leave a trail of confusion. He says, I used to accept the daily roll explanation for the decay of the long-term volatility ETPs, but once I did the math, it didn't add up. The reality is that when the VIX futures are in contango, both month 1 and month 2 tend to drop towards the VIX price over time. Given that, it's not surprising that the long volatility funds that hold these futures tend to drop in price. The next section, and again, it's a lengthy thing. You can click on the article for yourself, listeners. I will put the link in the show notes. It's called The Cost of Contango. It's not the daily roll. They have some graphs and charts showing how that effectively that is what drives that erosion rather than the roll yield. It's I I think to say it's a nuanced difference is a good way to put it. Some may say it's a distinction without a difference. At the end of the day, the net effect is still the same. You're still eroding. They actually kind of allude to that in here. They call the difference somewhat trivial, but still interesting. I don't, Mike, this is squarely in your wheelhouse. You deal with contango all day long. I'm curious about your thoughts on this and whether it's actually not technically that buying of expensive vol, selling of cheap vol, but actually this kind of, I guess you can say, sliding down the curve towards the cash, the net impact of that, to kind of quickly summarize the entirety of this article in one line, that's what actually causes it. Again, a little bit of a nuanced distinction, but I'm curious on your thoughts on this.
Sure. I mean, you say tomato, I say tomato, I guess. Meaning, whether we call it roll yield or volatility risk premium, the outcome on the price of VXX itself is essentially one and the same. The roll yield on any one day, or what can be thought of as the roll yield, can easily be overcome by movement in spot VIX. So it's not something you see like on a linear basis, sort of like theta burn on an option. The article that he references on six-figure investing, I've read that before, and I agree, given his examples where he shows no change in the VIX futures. If you roll notional amount out there, there is no friction or slip. That state of affairs simply doesn't happen in the market. Prices are always changing. So decay or roll yield or the erosion of volatility risk premium happens as a function of time. I think it is nuance, and in terms of what you want to call that conversion between spot and the futures. Mark, what do you think?
Yeah, I mean, he's right in the technical sense. What really it is the contango curve just kind of shows you what the actual product is doing. So, I was actually explaining this to somebody else yesterday. I mean, really what VXX does is with 30 days to expire, it owns 100% of one monthly portfolio. So at 30 days to expire, with November coming up, VXX will be entirely November, and November will be, let's just say $16 per future. All right. Well, with VIX at 1335, November has to get there somewhere. So what happens is VXX owns at, let's say, a net average price of $16 a future, and then over the next month, it sells that futures position at 1590, 1580, 1570, 1560, and so on, and then goes out and buys the next month out. So in essence, yes, that it really is the fact that the purchase price of the future is lower than, it's basically running a lemonade stand where it pays $1 a glass of lemonade and sells it at 75 cents. And visually you see it in kind of the shape of contango, but in terms of how the actual function, the article is correct technically. It's more the sliding down of the curve of the individual future itself than the rolling action.
Yeah, I think for the majority of our listeners, it is a fascinating rabbit hole to go down. Listeners, if you are so inclined, I recommend you check out that article if you want to kind of get lost in the weeds of VXX for a little bit. But yeah, it is, for most of our listeners, a distinction without a difference. If VXX is going to erode, why exactly that occurs, whether it's the yield or technically something similar to the yield or the roll yield, it's still going to erode. So if you still want to pick that strategy, it still should work. It'll work better or worse depending on the shape of the structure, of the term structure, obviously, but it still works. So, but interesting stuff. If you want to get lost in the weeds sometimes, as we do occasionally here on this program, check it out. So a couple more we got time for. Let's see. Quick one. Jim Collins. He wants to know, are transcripts available for Russell's interviews like after last episode when he was talking about RMC? No. We don't transcribe these shows. We looked into it a few times, but for the volume we produce, it gets fair amount of change a fair amount of coin to do the amount of volume we do and transcribe it all and do it accurately the way you'd want to do it, not just have some Google Voice ripoff version of it. So we don't have that. Maybe I don't know. Maybe Russell, you guys over there at CBOE will have some of your the interviews you do on the RMC website. Maybe those will be transcribed. I don't know. Do you know more about that? But for our stuff, the answer is no.
Yeah, well, or you can just listen to the episode over and over and over again and
enjoy
the awesome volatility-ness.
Everyone should listen at least 5 times, we think. That always
exactly.
That
What do you need
good.
Transcripts when you can hear my voice over and over and over again?
The tinniness ringing in your ears. Russell, are they going to transcribe your CBOE stuff? Do you know your RMC stuff?
No, but there will be. We've got, I think, 16 videos that are going to go up over the next 2 or 3 weeks on CBOE TV with the interviews that I did with most of the people that spoke at RMC. So there will not be a transcript of that, but the videos will be available. And starting next week, they're going to start coming out.
Check out the RMC website, to CBOE RMC, to search for that, listeners, to see Russell in all of his video glory, hopefully with his cool specs that he wears sometimes. All right, you guys have been voting in our question of the week. This week's question of the week has been, what is your favorite way to trade volatility? So it's right at home here. It actually mentioned some of the products we were just talking about. We asked you, do you prefer VIX, straight up VIX options and futures? We kind of merged those together because you only get 4 choices in a Twitter poll after all. Or VXX, the just discussed VXX, the recently discussed XIV, or then we went a little bit more hardcore for some of our institutional listeners, the old SPX or we went general, S&P, so you could use SPY if you wanted. Straddle, delta neutral type straddle. Or we gave you some others, and some of you guys replied with some interesting alternatives. Mike, I'll start with you because you're our guest. You get pride of place. Well, I know what your answer is. Obviously, you're going to pick VIX futures. You don't need to give your answer, but what do you think is winning our poll? What do you think our listeners are picking?
I would have to guess your listeners are probably kind of on the XIV, VXX wavelength, and maybe some VXX puts. Interesting.
1 vote for VXX with a half vote for XIV. I'll let you cheat because you're our guest today, Mr. Greasy Meatball. What do you think is winning, sir?
XIV.
Interesting. So 1 vote for VXX, 1.5 votes for XIV. Mr. Rhodes, you're probably cheating, but what do you think is winning?
No, I'm not. I don't cheat on things like that. Maybe on other things, but not that. I would guess VXX just because it has such tremendous volume compared to everything else.
Most people I've asked this to this week have pretty much come down to the side of VXX. I myself thought VXX would have a stronger, I didn't think it would win, but I thought it would have a stronger showing than it did. It turned out with nearly half of the votes, 44%, coming in a landslide for VIX options / futures. So the whole VIX complex, granted, it's kind of 2 products in one, so it's a little bit of a cheat, but still VIX blowing the doors off everything else. Number 2, VXX coming in a lowly number 2, only about 26% of the vote. Number 3, 19% for XIV, and then trailing far to the rear, the old delta neutral S&P straddle with about 11% of the vote. So yeah, still got about an hour, about a day left on that poll. So if you haven't played yet, come on, vote. But I think it's going to take a lot to dethrone VIX at this point. Speaking of VIX, we've got time for one more here. Let's go to this question from Javier Mendoza. He says, I think this one came in a couple weeks ago, so he mentioned SEP as well. We're finally getting to it, Javier, so don't be mad. We're in a relatively low volatility environment right now, which is contrary to the seasonality of volatility, which points to SEP and OC as the most volatile months. Do you think we're headed for a return of volatility this month or next month? Is it worth adding a few VIX calls to my holdings? And then he links to an article, I believe it's on StockTwits over there, where someone is charting the seasonality of volatility, and you could see very clearly for yourself, listeners, if you haven't heard us say it on the show, the spikes that occur around September and October. So yeah, historically, he's right that these are the most volatile months. That said, if you've been listening to this program for any length of time, you know, at the end of the show, we attempt to prognosticate what the vol gods hold in store for us, and most of us, except for Russell, have been aggressively fading VIX for the better part of the last few months. So I'm going to go out on a limb and say myself, and certainly I'm not loading up on any upside VIX calls. I won't put words in your guys' mouth, but I'm not feeling that love. That said, a lot of our listeners did vote on the Trumpocalypse last week, about half, saying Trumpocalypse is going to spike VIX over 20 sometime in the next month. So if you go by what our listeners are saying, they're feeling the Trumpocalypse. They're feeling that spike. So maybe they would have some VIX call love. I don't know. Mr. Greasy Meatball, are you feeling the VIX call love here?
I am not feeling the VIX call love. I think, we talk about the trade a lot. If you think vol is going to go up, I think VIX options are the best way to do it, but you have to be thoughtful about how you structure it. Otherwise, you will spend so much time waiting for vol to go up that when it finally does, it will do you no good.
Yeah, I mean, we've talked about it before here. Just because the cash is cheap, look at the premium to the futures. The futures are still pricing in a little bit more vol, and so you're going to be buying maybe a higher strike than you think. Don't think you can come in and buy a nice 15 handle and get it for cheap here because the cash is south of 13. That's not how it works. Or actually, where are we at right now towards the end of the show? We're a little bit north of 13 still, about 13.5. So the futures still have that premium. So bear that in mind. They're pricing something in happening this week. We shall see. Speaking of seeing, it's time for us to roll on into our final segment. It's time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody. Welcome to the crystal ball. This is indeed the portion of the program where we attempt to figure out what these ever so fickle vol gods hold in store for us. For the coming week, we're attempting effectively to predict VIX Cash. At the close of the show this time next week, it's right around 13.5 as we're closing out the show here. And last week, I was not feeling the love, but Russell and Mr. Greasy Meatball were feeling the love. They were competing as to who felt more VIX love. Mark actually feeling a little bit of that Trumpocalypse effect. He was going all the way up to 14.5. I didn't quite get there, about a point and change off from that. So it looks like our winner, even though they were both over, so Price is Right rules, no one wins, I guess except for me. But we don't go that way. It's 1370, was Mr. Corner Office. You're about a third of a handle or so away. And so you get pride of place, sir. I was fading to the downside. It's about 1260. I think given a little bit of time, we could get there, but the show's not long enough for that one to come into play today. So you get pride of place, Mr. Greasy Meatball, or not Mr. Greasy, Mr. Corner Office. Do you want to go first or designate a standee to go first in your place?
I'm going first, and I am going $12.95.
Oh, that's the lowest. That's the cheapest you've been in 6 months, maybe. So maybe you're not feeling the Trumpocalypse. You're not feeling what the futures are pricing in for the weekend. Mike, you're our guest, so you get pride of second place here. What is your mullet / reverse mullet / kick the can strategy telling you for where VIX Cash will be this time next week?
So this time next week, I'm going to pull a Price is Right on Russell and go $12.98.
Wow.
Oh,
wow.
Dude.
He comes in and just scams you.
I'm going to see you next week.
He comes in.
We can talk about it Thursday.
Just blatantly scamming you here on the show here. I kind of like that. I got to tip my hat to a guest who blatantly scams a co-host. That's good stuff. Mr. Greasy Meatball, what are you feeling here? Are you going to try to scam Russell too? I believe we have lost the Greasy Meatball. He's drowning in his pool.
I don't know what I think.
No, I know what I was saying. I was muted.
That's a good impression, though, Russell. I like that.
Improve the sound quality. So, yeah, no, I'm going to go with, he said $12.95, right?
He said $12.98. He scooped Russell to the upside. Russell was $12.95.
Yeah, so Russell's 25. So I'm going to go below there. I'm going to say $12.75.
Oh, I think we're all in a pretty tight range this time. Because I liked my spot from last week. I was going to go back to 1260, but I don't want to be in that close of a range for you guys. That isn't fun. So let's push it down a little bit. I'm still going to be a little bit slightly lower, but not aggressively. I'm going to go 12.25. So a little bit shy of where I would like to be, just for show purposes. But that said, someone's got to keep you guys in line. All right, and that's going to do it for the Crystal Ball segment. It's also going to do it, unfortunately, for this episode Volatility Views. There's the music. There it is. Let's wait for that. All right, but before we go, let's check back in one last time with my cohorts here, my partners in crime on the old program. See what they have cooking that may interest you. Mr. Guest, Mr. Mike, we'll start with you, pride of place. I heard a rumor, a little birdie was telling me, that you and perhaps Mr. Corner Office are up to no good next week. Can you, and also I think you'll probably be getting into some fisticuffs over this VIX upside scoopage. So why don't you give us the details on what you guys are up to next week?
Yes, next week I'm going to be on a volatility panel, basically the uses of VIX options and futures panel that happens to be moderated by Mr. Corner Office. And that's next Thursday at the CBOE.
And how do listeners, Russell, if they want to become a part of that and see that for themselves, how do they go about it?
I will tweet the link as soon as I hit mute on my phone. How's that?
There you go. So
and then I'll tweet it again on Monday when the next Monday when the show comes out.
There you go, listeners. So if you follow Russell or follow us or follow both, you should. And folks at Typhon Capital as well. And even the Greasy Meatball at Option Pit. Why not? Go for it. But you'll see that link. We'll retweet it for it. We'll also put it in the show notes as well. Of course, you can always go to CBOE.com. Click on the Institute. I believe that's where those links are. And you can find a way to register for yourself. So if you are going to be in the Chicagoland area next Thursday, let's see, what is the date? That is the 13th. So head on over to the CBOE and check them out. Talking all things VIX. It's going to be, I believe, you and Larry McMillan and Russell and I believe a few others up there on the session as well. Should be pretty interesting. I would go to it, unfortunately, or perhaps fortunately, I'll be in San Diego at a different event, Stocktoberfest, the appropriately named, or shall we say, unfortunately named event. So unfortunately, I'll have to miss it, but hopefully some of our listeners will be able to attend. And before we go, Mr. Greasy Meatball, what's cooking in the land of all things Carmen Line and the Pit?
Things are good. I'm gonna post another link. I wrote an ebook on VIX. You can download it and read it. It'll be on our blog. And just go and check out optionpit.com and read our blog every day.
There you go. Check it out, optionpit.com. Learn more. Sign up for some of his classes, including his trademark infringing options bootcamp. My lawyers will be copying him forthwith on that, but unfortunately, that's all the time we have for Volatility Views. Also all the time we have, again, for this episode. It was a great journey. We started off talking all things VIX futures and the mysteries therein. Then we got into some volume, or perhaps lack thereof, in a lot of the products. Then getting into some of the back and forth over these crazy ETFs like XIV and VXX, and wrapping it up with some more of your questions before Mike promptly upside scooped Mr. Rhodes. I like that. He earned himself a return visit on the show just for doing that. That was good. All right, on behalf of Russell and Mike and Mark, and indeed myself, I thank all of you out there in the listening audience for downloading, streaming, and subscribing to the show. Of course, for sending in such great and lengthy and detailed, I love it. Send in questions like that. Those are great. Graphs, charts, the whole 9 yards. We love it all. And we'll see you next time for more Volatility Views.
Thank you for listening to Volatility Views, the premier program for volatility traders. For episode archives and detailed show notes, please visit theoptionsinsider.com/volatilityviews. Be sure to make your own voice heard by leaving a volatility voicemail at 773-669-4VOL. or by posting a comment on theoptionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider. Volatility Views is brought to you by Russell Investments, a global asset manager and one of only a few firms that offer actively managed multi-asset portfolios and services that include advice, investments, and implementation. For more information on Russell indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.